Well, meantime, let's get to a major riddle forming in the markets today. On top of that weak construction number, the ISM manufacturing index dropping for a fourth straight month. That disappointing data helped traditional safety trades like gold rally, the precious metal settling at its highest in nearly a month. Bonds, on the other hand, couldn't seem to catch a bid. The 30-year yield hitting 5% again, while the 10-year closed back on 4.5%. So why isn't this part of the risk-off trade working in light of signs of a weakening economy? We were musing about this on our 12:30 call that we have on a daily basis.
We were musing. And we muse about many things.
That's true.
In fact, I think I was musing about how are you doing with your Yankees? You had a tough weekend in L.A.
Fine.
And
you
could have pitched the ninth inning on Saturday better than that guy.
That's the thing about baseball. They play 162, Tim. Okay. I don't get overly excited in May and June like some Met fans that I know.
Okay, well, we play.
We shouldn't be musing on the show too much.
And we play every day here, too, as well. So, if you think about today's market, it was the combination of, I think, the most important forces right now, which are the Fed. We had Waller yesterday. We had Goolsbee today. We had some Powell rhetoric sprinkling through that the Fed actually could be closer to rate cuts. This was the most recent rhetoric, and that's obviously good for the markets. I think if you look at where we are seeing leadership again from the market, it's not massive and it's not out of control. But I look at this relative performance of the Nasdaq to the S&P, and we're inching back to levels where we're getting close to the all-time highs. The index is where it is, but as we say, we were at relative highs back in July of 2024. So that stuff's interesting to me. Semiconductors continue to still outperform a little bit. The dollar weaker, I realize if you're looking at a weaker dollar and a weaker treasury market and a weaker equity market, we start thinking about all those things around deficit and the rest of the world. But for equities just in isolation, a weaker dollar for a lot of these companies is actually very strong. I think that was part of the uptrade today.
So I think part of it, though, you talk about the deficit. I think that for sure, there was a story today on PIMCO and Double Line is sort of on strike, right? Not willing to be in the long bond and, wondering, all right, as this bill makes its way, what will it end up being in terms of how much it will add to the deficit? And I don't know. It's at some point, who knows when, but maybe that's just starting to weigh now. We'll have to see how they choose to fund, right? Probably towards the front end of the curve, probably bills.
Right.
But is there another reason? Is it that people think the tariffs will be inflation coming back later or soon? I don't know.
Right.